questions. But I would just say gold is more likely to be confiscated than silver. And if you're sitting on gold bars or foreign sovereign coin or generic rounds, and there's a confiscation, you're going to be included. If you own Eagles, you may or may not be included. And if you own pre-1933 gold, the odds are very slim that you would have your coins confiscated because they are considered legally considered collectibles. Capital. The only question is, how much capital do you have? Do you have enough capital that you'll be able to live on, pay your property taxes on? I mean, everything's relative as far as size. You know, if you've got just a little bit of gold and silver, yeah, it'll help you eat, but it's not going to help you pay taxes.
In today's news recap, Chinese silver demand surges. Is this a calculated move? Gold demand in China has been strong this year, reflecting a broader movement of the yellow metal from the west to the east. But the Chinese aren't just accumulating gold. They have also been hoarding silver in recent months. The Shanghai Metals Exchange has reported a significant surge in silver volume, with prices consistently higher than Western exchanges. The price premium in China compared to the West has been as high as 10%. This signals an extremely strong demand for silver in China. Chinese silver imports have also surged, hitting a 3-year high of 390 tons last December. In June and July this year, imports broke through the 400-ton level. A year ago, import levels were half that, averaging in the 200-ton range. Last year, China held the second largest silver reserves in the world, trailing only Peru. Chinese reserves were reported at 71,000 tons. Peru, a major silver producer, had a silver stockpile of 98,000 tons. U.S. silver reserves were 23,000 tons, ranking 7th globally. If the Chinese can push the silver price higher, it could have major implications for the West, the Post reported. If the price of silver continues to rise, it could increase production costs for a wide range of industries, from electronics to solar panels. This could lead to higher consumer prices and a further slowdown of economic growth as China outproduces the West in electronics and solar panels. However, there is some indication the growth in Chinese solar panel production could go beyond market-driven demand. According to a recent Bloomberg report, the Chinese are producing solar panels at an excessive clip. There is some speculation that the Chinese are engaging in some low-level economic warfare, hoping to put the squeeze on Western economies. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Yeah, you can't do a rule of thumb because you don't know what the future purchasing power is going to be. It will increase from where it is now. How much, you have no idea. I mean, it may be that if you've got 200 or 300 ounces of silver, that might be enough, depending upon what the revaluation, what the reset is. All I can tell you is historically, if you had 1,000 ounces of gold or 10,000 ounces of silver, you were a wealthy person for hundreds and hundreds of years. Do those numbers, will they still work? Yeah, I think they probably will, but there's no way to know exactly what the purchasing power is going to be. And I would say you can only do the best that you can do with what you have. I mean, you know, one person may have saved a grand total of $50,000. Somebody else may have saved $5 million. It means the same to each person because that's their nest egg. And the one that's at 50,000, can't do anything to get the 5 million. So do the best you can. And I would just say the rule of thumb is you only leave in the system what you need for current bills, and you take everything out of the system that you don't want to lose, because in the system you're going to lose it. So I mean, do the best you can. There is no way I guess there is a way, if you could do the math based on today's pricing and today's purchasing power, if you're comfortable now, you should certainly be comfortable later because the purchasing power is going to pick up. I don't know. Is it going to double, triple, quadruple? Who knows? I mean, there's no way to forecast that. But understand that the purchasing power will pick up. So, if you've not been able to accumulate thousands of ounces of silver or hundreds or thousands of ounces of gold, don't fret. Just do the best you can. And it may work out that what you're thinking is not enough today may end up being enough to get you from here to the next system with wealth intact. I guess I would just be blunt and tell you, don't take shit from anybody. It's your money. You worked for it. It's your money. It's not their money. You get to do with your money whatever it is that you want to do. And yeah, if you go to your financial planner and tell them, I want to take X amount of dollars out, or I want to take the whole account out, or whatever, and they're going to ask, what are you going to do with it? You tell them, I'm going to buy gold and silver. Well, the first thing they're going to say is, oh, well, don't do that. Gold and silver are so risky. Well, I mean, gold and silver are the opposite of risk. They have zero liability against them. They have zero counterparty risk. They cannot bankrupt. When that brokerage house goes down, you've got your gold, you've got your silver in hand. It didn't get touched, whereas your share is going to be taken away in the great taking. And I would just tell you, whether it's your financial planner, or whether it's people, friends of yours, a spouse, it's a little difficult because it's always good to have your spouse on board with what you're doing. But if your spouse is absolutely adamantly against doing gold and silver, just understand that no one is going to protect you for you. The only one that's going to protect you is yourself. So, again, it's your money, and no one's going to protect you unless you protect yourself. So, take action.
In today's news recap, Bank of America expects declining silver inventories to make the deficits count. The Silver Institute shows that the silver market has been in a deficit for the last 5 years. And during that time, we've seen substantial decreases in global inventories. Which makes sense, as the metal has to come from somewhere to meet the shortfall. Yet, with no resolution to the gap in sight, as the deficits are widely expected to continue years into the future, a recent Bank of America report suggests that the declining inventories are starting to make the deficits count. Their report also commented on China's surging silver consumption, which has continued to grow in 2024 as their solar production has, again, exceeded expectations. And with governments calling for a tripling of green energy by 2030, the demand for silver is going to have to increase if the governments are going to get anywhere even close to meeting their targets. China has already shifted to being a net importer of silver. And we've personally talked with one of the larger silver producers who told us about how Chinese smelters have been going directly to Latin American silver producers and offering substantially reduced treatment charges because they're able to take advantage of the increased premiums in China. Now, we'll show you more clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps.
Talking about a retirement plan, there's really only two things you should look at. I mean, if it's gold or if it's silver, you either look at gold or silver eagles, or bar form, or generic form. You want either the coin of the realm, which I think is the best thing to do. You're going to pay some premium, small premium in gold. You'll pay more premium in silver eagles. But within a retirement account, they can't sell you numismatics, and that's where the real ripoff is. I mean, there's some people that interview all the time. And I mean, you'll see their faces from interview to interview, And what they're saying is correct. Uh, if you're going to do silver in the United States, you do junk silver or you do eagles. Those are the coins of the realm. If you're going to do gold, then you want either eagles or you want pre-33 gold. And I think pre-33 gold is an excellent choice, but understand there's very, very little difference in price between, say, an MS63, 62 or 63 St. Gaudens or Liberty versus an eagle. They're almost the same price. Mm-hmm. Whereas the one that I'm thinking about right now, they charge regular retail price on it, so there's already a markup in it, and then they charge 26% on top of that. And people, they don't check their invoice; they just send 100,000 or whatever, and they get the coins and they think they're good until somebody asks them, what did you pay for it? Or they go to look to sell it and they find out they got completely smoked on the buy. Mm-hmm. And that is disclosed. But in what industry, in what world does anybody get to charge 26% commission on a commodity? Just regular current year or past year eagles that come in a tube. They're not graded, they're not mint state anything. They're just uncirculated coin in an IRA.
Yeah.
Yeah, junk is not allowed in an IRA because it's 90% pure, and the regs for IRAs is, with the exception of the gold eagle, the coin is the metal has got to be 99.9 fine. Gold eagles are not, but there is that one exception. Over the last, call it, 10 plus years, right now is the best time to swap because the premiums, the premiums on junk silver have pretty much evaporated. So you're not looking at a huge loss doing your swap. The only place I would recommend that you do silver eagles would be within the IRA, because I think junk itself is a better form to own. When this system goes down, what would you rather have? 14 dimes or one silver eagle? That's a no-brainer. You got 14 transactions versus one. And in gold, there you go. Haven't moved too much either way over the last 10 years on eagles. I think the biggest swing has been, 3 or 4 percentage points. That's not been a huge, did not have huge premiums. But I would just say gold is more likely to be confiscated than silver. And if you're sitting on gold bars or foreign sovereign coin or generic rounds, and there's a confiscation, you're going to be included. If you own eagles, you may or may not be included. And if you own pre-1933 gold, the odds are very slim that you would have your coins confiscated because they are legally considered collectibles, especially in silver. If you're sitting on bars, if you're sitting on rounds, if you're sitting on foreign sovereigns like Maple Leafs or Crew Grants or whatever, do yourself a favor and do the swap now, because the cost for you to swap is probably the lowest it's been in the last 10 years.
What do you think of today's show? Do you think gold and silver prices will be manipulated to the upside moving forward, squeezing the big banks and making a fortune for the average Joe that is stacking metals? Post in the comments section your honest opinion, share this video with someone who hates Bitcoin, and send a super thanks if you find our recaps valuable. Now watch this video right here because it's a perfect fit for you. I see you on the other side.